Morning again, guys. Thanks for amazing panel, Ram, and setting the tone for the day. So here we come to the panel 2. And again, no surprises for guessing. It is about digital banking. And we'll look at how open APIs and business value chains are changing in digital banking. I've got esteemed panelists with me. I'll just invite them in. So my first panelist is Dr. Ali Al Shekaili, AGM for Head of Digital and eChannels at National Bank of Oman. Welcome, Dr. Ali. My next panelist is Tariq Al-Bakri. He heads the digital e-channel sales and support at AHlibank. Tariq. My next panelist is FinTech and Sherif Elmansy. Sherif leads product and application development at ITS, which is one of the leading Islamic and conventional core banking platform. My next panelist, if you can have him on the screen, he is joining us remotely, Radu Topliceanu. Very, very warm welcome, Radu, to you. Radu heads as an Executive Vice President, Mashreq Neo, Digital Bank and its personal banking division. Radu, very warm welcome to you. I hope you can hear us well, Radu.
Yeah, I can hear you. Can you hear me?
Excellent. So you are on screen. Very, very warm welcome to all of you. So it's been an interesting day. We started with the trends. Then Ram took us into different areas of banking, an investor's perspective, a perspective of a banker, and a perspective of a leader of the bank. Digital is it's been here for almost a decade now. My question, Tariq, will start with you. With digital transformation and ecosystems which are coming in, and you've been doing a very tough job at Wholesale Bank. Everybody thought, there would not really be a role for digital in a wholesale bank. If you can just tell us how you've seen over last decade the channels and wholesale bank changing for digital.
All right, first of all, thank you for having me here. It's a pleasure. It's actually my first panel, so it's an honor to be part of this panel. This is a great question, and all of you have seen over the last 5-6 years how things have changed incrementally. And I'll break it down in a way. I'll give you 3 different eras and tell you how things have changed within those 3 eras. We'll start off with the pre-COVID era. So how were corporates banking in the pre-COVID era? Everything was still manual. Everything was slow processing. I mean, if you can just imagine how companies were trying to do transfers, how they would do it is they would first write a manual letter. Then it would go to the different approval processes, level 1, level 2, level 3, whatever it may be. And then they would have somebody sign and seal, and then it would send it to the bank, and the bank would take it. If it's before cut-off time, they'll process it on the same day. If it's after cut-off time, they'll process it on the next day. So you can just see that's an entire long process, and that's how they were banking before. Everything was slow. And the thing is, digital products were available, but they were not a necessity, in my opinion. And they were very basic. At that time, pre-COVID, I think every single bank had corporate banking, corporate internet banking applications. And they were very simple in terms of capabilities, facilities. We're talking about just account statement viewing, maybe even only for 1 year, and basic transactions. So that just sums up the pre-COVID era. When COVID came, what happened was it was what I would say, it was a challenge for everybody, for banks, for corporates, for individuals. Our life changed, the way we started doing things changed, and digital banking itself changed. And I would say COVID was actually the Kickstarter or the phase that allowed digital banking to expand to the level that it is now. Of course, the challenge was our corporates were not able to come and bring their manual letters or come and visit the branches due to the regulations which were ongoing at that time. So banks had to think of a way or take the opportunity, take a challenge into an opportunity to start digitizing very slowly. But we were able to digitize our application forms, for example. We were able to digitize onboarding. And of course, the regulator and central bank started to move at that time very quickly and became much more responsive to the needs of the corporates, to the needs of the banks as well. So I would say COVID at that time created a necessity to be digital. So we've gone through era number 1, era number 2, and we are currently in era number 3. As you can see, the landscape of digital banking is shifting very quickly, and it's growing very quickly. Not only from the bank's perspective, but the things that are coming out of our corporates, the requirements that are currently, that we as banks have to personalize our products specifically to our corporates' needs. These things are growing. Like, for example, we have had one of the biggest companies in Oman, without mentioning any names. They came and they went through all the banks and asked them, we need your product to do A, B, C. And we as a bank, we took that as a challenge, and we took it as an opportunity also to grow and ensure that we can provide this to our customer. At the end of the day, we were able to not only give them the product, but also to connect with that customer to help them grow and help us grow at the same time. So again, during today's era, speed isn't just an expectation. It's a necessity when it comes to digital banking, as well as security as well. We're seeing integrations, different types of integrations happening, host-to-host integrations, ERP integrations, as well as API integrations. One more point also regarding the landscape today, how it works is before we were only giving a single digital product, a corporate banking product, so the customer can go and conduct their transfers. But now the customer, what they need is a digital suite. They need a group of products, whether it's collections products, whether it's liquidity products. And just to sum it all up, I would say that we're not just digitizing with our customers now, we're starting to connect with our customers, and that's what the landscape currently looks like.
Interesting. So 3 eras of digitization, one pre-COVID, one immediately after COVID with huge amount of adoption, and clearly the 3rd era where now there's a connect with customer and you are designing the products personalized for the customer. So very, very interesting insights. We'll go to Radu, to you. You heard Tariq's view on the wholesale and how wholesale is becoming B2B, API ready. Now, you've been seeing many markets, Radu, right from Europe to Middle East and UAE, one of the most thriving market on digital banking. And earlier in the day, I spoke about embedded finance, partnerships, and need for hyper-personalization. So how do you see at Mashreq the things changing in digital banking for embedded finance, partnerships, and the personalized experiences?
Thank you, Cedar. First of all, I hope you are hearing me well.
Yes.
I will start by a statement. In my view, the real innovation is not in technology. It's the seamless experience that it enables. From this perspective, I see the next phase of digital banking evolving along the free connected path that you mentioned, the embedded finance and what I call anticipatory intelligence for personalization. And I think all these are going to be embedded into a super app, a banking super app, which is centered on improving the customer experience. Let me start with the embedded finance because it's something which is already changing how customers interact with money. Banking as a service allows financial services to be delivered directly inside the apps people already use, from telcos, e-commerce, mobility, or housing platforms. No extra logins, no app switching, very little friction. And I can give a personal example from Mashreq experience. We built the partnerships in Egypt with EAN, one of the biggest telcos in the countries, and the users can open and manage a bank account entirely within the telco's ecosystem. For customers, that's an immediate access to banking. The banking part of the interaction happens in the background when and where customer need it. The next shift from my perspective is anticipatory banking, using intelligence not just to react, but also to predict and assist. Machine learning can already analyze patterns in spending and behavior to detect intent, spotting when someone might need a travel loan, a saving boost, a payment reminder, or when something wrong is happening with the account. And the next step is when generative AI turns those insights into some personalized, empathetic communication that feels timely and relevant to a segment of one. Through agentic AI, I think we are going to move from advice to action. Systems will be able to execute financial tasks automatically on the customer's behalf. Of course, it's going to be important to manage the governance around it and to do it within limit. Finally, in my view, the banking super apps are going to become the, if I may say so, the connective tissue of the daily life. We are going to blend the financial and lifestyle journeys, booking a travel, paying your rent, managing subscription, investing, everything is going to be in one place. And what makes this approach powerful, it's not so much the scale, but the context, the ability to serve customers across life moments, not just financial transactions. Here, partnerships are extremely important. There is no single bank that can build every vertical, or if they are going to do it, it's going to be extremely costly and is going to consume a lot of time. But by integrating with trusted partners, banks can offer a holistic experience that feels natural and continuous for the customer. To summarize, I think from my perspective, the next phase of digital banking is not about more product or more features. There are already plenty. It's about anticipating needs, integrating seamlessly, and delivering value for customer in an effortless manner. Anticipatory customer-focused banking means removing friction, earning trust, and turning data into genuinely helpful human experience.
Interesting. So if anybody
I hope
thought,
this answered your question.
very, very interesting insight. So anybody thought that technology is going to be differentiating you? Answer is not. It's about the customer and the frictionless experience through embedded products which customer wished as part of its journey and understanding the customer journey. Very, very different perspective, Radu. Sherif, I'll come to you now. You heard a wholesale banker, you heard a retail banker, and everybody's saying it's not about technology, it's about the customer and the experience. And you've been designing the technology, and what's last 2 decades of technologies we have seen, from core banking to enabling APIs for open banking. How do you see the bank can create a broader ecosystem, right, with a modern technology, which will help some of these experiences and frictionless discussions which we are seeing?
Yeah, thank you for having me today. First, I was working in a bank before in 20 years back, and I saw how legacy system is and with a modern core banking is. So coming from legacy systems or core banking to modern banking, you find the legacy core banking is just about branch-centric and batch processing for the transactions. It's actually record keeping and ledger keeping. However, if you go for modern core banking, you will find it's all built about open APIs, microservices, cloud native, artificial intelligence, data-driven and event-driven, also continuous improvements. So yes, we are toward the modern core banking that's supporting digital transformation for the banks. So how modern core bankings are going to help the business leaders in the industry by real-time processing now customers will require an instant onboarding. They need an instant decisioning, instant transaction affecting their accounts so they can take decisions fast and reliable. Also, from the banking perspective, the composable architecture, they need to have the ability, the modern core banking will give them the ability to just design products and services that will be rolled out to the customer in just few weeks rather than waiting for years to develop and build this kind of products. Also, in terms of cloud scalability now for digital demand, it's not linear, it's actually spikes. So modern core banking needs to adapt to that and have scalability and elasticity when they are dealing with digital channels. They have to, in order to support it 24/7, in addition to the data analytic and artificial intelligence. All of this will also help the business leaders to achieve their business impacts. So how this will help in the ecosystem, or including the financial institutions in the digital ecosystems? Of course, modern core banking can enable that because they are built over an open APIs. So they have the ability to integrate with fintechs and integrate with super applications, integrate with RegTech, InsurTech. Also, this will also enable them to have the banking as a service for non-bank institutions. So all of this will help in the business to achieve their roles. But here also this ecosystem shift will help will change the operational model. So instead of the financial institution selling products, they are going to sell capability. They are going to sell KYC. They are going to sell lending, decisioning for the lending for the customer. Also, the revenue model will change from expand from interest plus fees to platform fees and partnership revenue and API monetization. So all of this will be changing in the model for the business here. But at the end, the catch is not just the technology; it's also changing in the operational model of the financial institution itself. They need to start thinking about selling product and capability rather than projects. Also, they need to think about in terms of culture. They need to not to be risk averse, but they have to try and iterate in terms of the architecture. They need to start thinking about progressive improvements and adding more capabilities to their ecosystems. So legacy core banking systems will just imprison the financial institutions in their walls. However, for the modern core banking, they will expand them to the whole world, and they are able to integrate and work proactively with others. So the financial institution who is not keeping track with the modern core banking, the ecosystem, the new technology will actually fall behind and will not be able to achieve the products and services that other competitors are doing.
So it's end-to-end, looking at a core banking, which is digital, publishing the APIs, scalability. Remember now there is no humans helping the customer deliver service. So your systems needs to scale and deliver a customer experience. And then think monetization on technology, how you can monetize the scale technology. Very, very interesting, Sherif.
Chetan?
Thank you.
Chetan, I have a follow-up question for Sherif, if I may. Because there is a wide debate if a core banking should maintain the business logic or should become, if I may say, a dumb general ledger, and the business logic stay somewhere outside in the middleware or in a different place? What's your view on this?
Yeah, I'll give Sherif an opportunity. Uh, and again, I'll add to it as well, but Sherif, go ahead.
I do believe the core banking should be light in the back end, so it should keep ledgers and records. However, it needs to have a layer of interaction through other APIs and open banking, microservices, to be able to integrate to the ecosystems. So yes, when we talk about modern core banking, it's not just a piece of the general ledger and the accounting that's being done, but also the other products design and other components in the core banking that will serve the business.
Yeah, so I would say I tend to agree with Sherif. It's componentized. It's not a one monolithic system anymore. It has a product processor and accounting engine. It has a product pricing engine. It has a product experience and API engine, which provides digital APIs, which finally gets consumed by the digital system using either microservices or open APIs. So I think that's what now a new definition of a core banking is, which is required for the digital generation. Moving to Dr. Ali. Ali, you've been doing innovation, digital at National Bank of Oman, where you heard everyone, what's going to matter going forward is digital ecosystem and being connected to your customer. How have you been transforming this to deliver the value to the customers at NBO?
Thanks, Chetan. Actually, it is not only in MBO and all in the institution. There are two types of customer, internal and external. We have to satisfy the internal customer. The internal customer, all the stakeholders within the institution, and the external, our customer who are adopt our value proposition and the solution is offered in the market. When it's coming to MBO, we have clear direction from all the internal stakeholders, what we need to deliver it, and how we can innovate in the market, and how we can simplify the journey to customer. It is always, you will feel if you're success in the market, if customer adopted your solution or your digitized product and services, and it is adding value to them, and it is day to day, which in addition on that, to be personalized to the customer. It doesn't matter if we internally agree to digitize one services, it will be success in the market if customer is not adopted. When it's coming to the internal stakeholders, and mainly we call them as customer as well, because if they believe that what we are working in it will be add value to MBO, that it gives us assurance once we are going to market, it gives us encourage that how we can deliver it to our customer and to ensure there is a retain behind of that digitized product and services. I remember when we started back to 2021, it was not that easy to convert the customer mentality from the legacy to the technology, but we believe it. This is the right direction for Oman market, based on the population and based on the age of the customer, and mainly from what's coming in Oman market specifically, it is more youth compared to the other segment. And we believe it, and youth, it is looking for the easier, seamless, simplified solution as well as secure. It is not only to simplify the journey and you forget the security. Security is our main element. We start our journey, and today we are so proud that is MBO where it is. And this is when it's coming to the internal stakeholders, and that's what they believe it, and we deliver it. When it's coming to the customers with the local competition, we call it always it is healthy competition. We have seen other banks and other fintech who is coming to the market, how they are introducing the services and products to the customer. And I think each bank in Oman, they have a unique services or a product. And we try to compete with each other, but it is in a healthy way. We are not competed in unhealthy, which is also is good for our market. This is where it is differentiated Oman compared to the other market, how we are seeing it. Oman population, there is no growth. If everyone noticed, even last 5 years, it is almost steady. Even with the coming 5 years, let us to see it based on that projection has been published. It is not expected is more than 2 million based on the current. And with this current competition, where it is differentiated, each banks will be more specific in banking sector. We are not going to be in the fintech because there is a debate about the fintech. Are they going to add value or not? But from the banking perspective, what I am seeing in Oman, it is healthy competition. And we have a unique product and services from each bank. There is no comprehensive solution in one bank as today. And I am not going to mention any bank name because of the politics as well. But when it's coming more to MBO, we are very keen about customer. We try as maximum as we can to digitize the product and services from end to end and eliminated customer to visit the branch. We are not recommended to visit the branch. And that in line with our 5-year strategy, where we have noticed in Oman market, there are expansion in the legacy branch, while the only bank maybe it is not expand, never last 5 years in legacy branch is MBO. We are, and there is one strategy has been announced back 2016 by Mashreq Bank. What we have seen, it is adding a lot of value where they shut down the legacy branch by 50% in 2016, and today I believe they have 7 legacy branch, and they came with a digital bank, with a new bank, which is compensate what they are looking for it, and they give them space. And this is the market should be work. And I believe what has been presented in the previous panel, I totally agree, 100%. If bank continue the same current business model, there are no value from the bank with the coming 5 to 10 years. Because AI, it is in place, open banking, API, but the bank should be understand what is customer looking for it. And this is what we are working in it aggressively. Yes, we have seen each bank introduce a new product and services, but it is cataloging all that main objective that we have debate because what we are seeing it from the market. But from MBO, we are also very keen about customer, our own customer. We try to maintain them as maximum as we can based on the services we are offering to them. We try to create a seamless journey from them, and we reduce number of clicks within our digital channel. We have our own operating business model when it's coming to the digital banking, how we digitize it, which is again in line with the bank overall strategy. We are not working solo. We are still within our bank strategy, but that to ensure whatever we are offering to customer, it is going to be adopted by customer, accepted by customer, and it is adding value for the bank as well.
So very interesting perspective Dr. Ali is putting up. Just don't do digitization because next bank is doing it. Have your own strategy in place at the enterprise layer. Keep an internal and external customers in mind. Again, this brings me to a very interesting product. One of the first products in Oman on digital was skilled by its branches. Yeah, so remember that. So branch is in competition sometimes because people are not clear on how a digital account and a branch account will be treated from performance management and a growth perspective. So I think you brought a very, very interesting perspective to be aligned at the enterprise layer and deliver what digitization customer requires. We'll go to the next question, and my next question is for next 5 years, right? And it's each of you can have a minute. Tell us one trend which is going to impact the digital banking, and banks needs to align to that and utilize it to deliver the customer value. Yeah, but just one trend, and you may have to explain also why you believe that one Yeah, and if possible, don't say that something which previous person has said as well. But all of you agree to something, then that's fine as well. Tariq, I'll start with you.
All right. Before going into a trend, and I will just keep it short, and I will tell you the next biggest thing, or the thing that banks should be focusing on over the next 5 years is one four-letter word: data. How you collect this data, how you monitor this data, how you use this data to fuel the next trends, whether the trends be machine learning, whether it be agentic AI, whether it be hyper-personalized product selection. Data is the one key and common aspect through all of these trends. So I'll just keep it light and short there, data.
So it's data it is for Tariq, and corporate data is anyway likely to be a big source of payments and innovation data. Moving, Radu, to you. What do you believe is a one trend for next 5 years? Given Mashreq is across markets, it may be a broader, maybe a couple of aspects also, if you believe some markets are going to be different.
Yeah, thank you, Chetan. I truly agree. Data would be extremely important. For me, the big shift coming on to us, it's being quantum-ready banking, preparing the system, the data security for a world where quantum power becomes practical. Why I'm saying this is because, in my view, quantum computing will do two things at once. First would be to completely disrupt security as we know it today, and the second one would be to supercharge all the experience. You know, if I'm looking on the risk side, most of today's encryption standards could be broken by a quantum system. Maybe not today, but in 1 year, in 3 years' time, this is going to happen. So this is why the forward-looking banks and also the regulators should already invest in post-quantum cryptography. This transition is going to be crucial because, you know, in banking, trust is the big differentiator. But also there is an opportunity side where quantum computing is going to unlock computational power beyond our imagination. And using the data mentioned before, this will mean real-time stress testing, ultra-precise risk pricing, portfolio optimization. Anything could be done with this computational power. And this, for customer, will translate into value and customer experience. So if I would summarize, I would say that the last decade was about digitization and personalization. The current one, probably it's about AI, and the next one will be about quantum ready.
Interesting. So quantum computing and quantum ready will bring in a different speeds and security to the banks, which is going to help you drive the trust on the customer. Moving, Sherif, to you.
From my opinion now, I think we already done with the digital era, okay? The digitalization is already done. Now I think the next stage or the next trend will be bank as a platform, okay? So the bank needs to be a part of from the larger ecosystem, and it needs to integrate with this ecosystem. And this will be enabled by, of course, open APIs, that will enable bank to sell capabilities rather than products, and like KYC, the automatic decisions for the customers. Then also this will be enabled by the hyper-personalization and artificial intelligence, where we will be able an instant decisioning while the customer is sitting. The systems are going to get to take the decisions on behalf of the bank, with a lot of trained data. And third enabler is contextual finance, where the bank journey will be inside the journey of non-banks. So this will promote something what we call an invisible bank, where you will be able to, the bank will be part of others, not just owning the user experience of or the journey of the customer by itself. Finally, the artificial intelligence, of course, will play a great role here. And also, bank need to think about the partnership with fintechs to be part of these ecosystems. So they don't need to think about it as a threat. They need to think about it as a partnership and to generate revenue generation from this. So in nutshell, what I say is that bank as a platform is the next trend in the next 5-year trend.
So it's platform banking,
Yeah.
working with the ecosystem and delivering the services, which is a very interesting perspective, Sherif. Moving to Dr. Ali, what will be your choice? Everybody has chosen an interesting perspective.
Since it is allowed only one statement, I will summarize it. It is exploring and accelerating the AI in their good shape based on the institution objectives for hyper personalized banking services.
Interesting. So Dr. Ali has chosen AI and leveraging AI for hyper-personalization services. I'll open up now for the questions on digital banking. Marwan will be able to give just mic. Yeah? I think there's a question right at the end, if you can give it to the gentleman. If you can introduce yourself and then ask the question.
Hi, my name is Ali Al-Butashi from Oman Arab Bank. I have a question for everyone of the panel. Thank you for the great communication here. In your opinion, with everything that is moving, who are the competitor to a bank? So obviously we know that a bank has other banks as a competitor. We know that fintech company kind of came and kind of made their way in that market and became a sort of a competitor in a good way. But who are the other competitors for banks now, since we're kind of reshifting the model going forward?
Very, very interesting question. So in the new digital avatar, if you can have Radu also on the screen, if in a new digital avatar, who is the real competition? Is it the other bank down the lane?
We
is it...
we nominate Tariq to answer.
But Radu, it's an interesting question. Who is the bank's competitor? Is it other bank? Is it fintech? Given all the digitization which is happening.
Based on the current situation, fintech cannot compete with the bank in Oman. This is the fact, either we agree or disagree. I had a valuable discussion with Abdullah Al-Ambouri before we joined the hall. There is a problem. And the fintech, either they agree or disagree, they have to go one step back. They cannot compete with the bank from all aspects. But still at the same time, I am the bigger believer, fintech, they can add value if they have a clear operating business model. What they are looking for it, how they can resolve the existing problem, which the bank, they don't want to be in because they have another line of business. This is when it's coming. But for long term, yes, there is a competitor. And I believe in previous panel, they have given an example about Carrefour and Lulu. Today, who has the biggest customer base and how can reuse it? In Oman, it is the telecom. But did the telecom prove for the bank they are success story up to date? No, because we have seen different experience either from Omantel or from Ooredoo, because they are the largest telecom company in Oman. But having said that, we have seen how Vodafone changed the game in the market. Is our main competitor in banking sector the sector who has the biggest customer base and they understand customer behavior?
Interesting. So I will just add to this. So it depends. Answer is it depends. Based on customer segment and the offering. If you are discussing payments, fintechs are coming in big way with the banks and payment companies, right? In Oman, if you are looking at loans, it is going to be your fellow bank who's going to offer, because we offer based on salary. If it's for corporate, it's going to be multiple fintechs who are coming in through banks, like Bank Dhofar introduced something recently, where actually it's powered by fintech at the back, right? So it all depends on the segment and what customer product offering are we discussing. Any other questions?
Ethan, I lost the sound from the room. Can you hear me?
Yes, yes, we can. Go ahead, please.
Make a sign if you can hear me.
Yeah, we can.
Okay. Just wanted to add one thing about the competitors. From the perspective from the UAE, where the framework for open banking it's already being implemented, that being open, this, in my perspective, opened the space not for fintechs, not for retailers, but for the big techs, like the Amazons, the Google, and everybody, because these are the guys which are sitting on a huge amount of data. They are having huge computational powers. They are probably the most advanced in terms of skills. And through the open banking, they can become a player in the market. For me, that's the biggest change which is going to come into our industry in the immediate future. Sorry, I lost the sound from the room, but I just wanted to add this.
So again, I think it's very, very interesting. So the telco was one answer here. And now we have an answer that e-commerce players who know customer much better in some cases can be your biggest competitor as well. So keep an eye open there.
Sheetan, just I want to add something here that based on customer segments, of course, nobody will be able to compete with banks in corporate customers while they are dealing with credit and the credit facilities to big players, okay? So I think we are talking here about the retail itself, where a teleco company can compete or an e-commerce can compete. In terms of fintech, I do believe that fintech is not a threat for a bank. They are complementing each other. The bank at the end will take a back end, and the fintech will be the front end of dealing with everything. And through the open banking and the open APIs, the API first, the microservices, this will enable the fintech itself to integrate and partnership with the banks rather than being competitors.
So fintech being enabled by the bank can be a big competitor because it's bank's brand name and front-end technology of a fintech. Sorry, there was a question from the gentleman. If you can give the mic.
Yeah, I have the mic. No worries. Thank you for the great discussion here and great panel. My question is, Wholesale Banking, Bank Muscat. My question is to Radu. You said like the prediction that you have for next 5 years is quantum readiness. Quantum readiness, what I know about is processing data faster. So how do you be ready? That's quantum computing, right? That's what you mean? Thank you.
Yeah, absolutely. I hope you can hear me now.
Yeah, just can you just increase the volume a bit?
Faster.
Yeah, Radu, go ahead.
Yeah, it's faster computing, but it's not faster like 1.5, 1.2 faster than it is today. It's not evolutionary. It's a complete revolution. The speed of computing is going to change by a factor of 1,000, 10,000. Nobody knows yet which is the potential. So I think the way to go here is to partnership with organizations which are advanced in this area. Google is working on this. There are a lot of organizations working on this, partnering with them, understanding the capabilities which are coming and starting to test it in sandbox. It's quite complex. It might be quite expensive, but I think it's a very good investment for the future because everything will change. It might be in 3 years, it might be in 5, it might be in 10. We don't know yet, but the world will be completely different.
Yeah. So it's a size of the bank. If you can invest and if you have the data size, which Bank Muscat has, then the speed can bring in a huge competitive advantage in what you can do.
If I may add, how can we connect that to the customer experience? Currently, what we have, the systems are fast enough, if we do it 10,000, and I can understand from transaction perspective, from customer experience perspective, how can this add to it, basically?
Again, very, very interesting question. I'll repeat for you in case you didn't hear well. If you have to connect
I
it to
heard
the
it.
use
I
case.
think yeah, there are two sides of it, as I mentioned before. One would be from customer interaction perspective to provide trust and security. Because all the algorithms that we are using today for encrypting data, for protecting ourselves and everything are going to become obsolete. With this additional power computing, a password which today you need 10 years to break it is going to be broken in 1 minute. So you have to be up to speed in order to protect customer data. Now, in terms of how the experience will change, the amount of data that you will be able to process and the speed of the data that you are going to be able to process would be extremely different. I heard in the previous panel a conversation about checking through Open Finance an approval for a fridge purchase, yeah? And the speaker was mentioning you can do it from the moment when the transaction is done on the POS until the moment the fridge has to be delivered. With quantum computing, it's going to be instant. You don't need the time from POS till the shipping the fridge. You can immediately process all the open data you want and say yes, no, based on a lot of elements.
Excellent.
Thank you.
If there are any other
Thank you.
questions, happy to take the last question. Yeah.
Hello, the panelists. This is Intisar from National Bank of Oman. If we can conclude based on the digital era, can we conclude that the future is going to be zero legacy branches or zero traditional banking? My question is driven from the latest incident which happened in the Amazon web service, where some of the countries had to completely blackout because of the failure in one of the data centers. So people were completely out of internet, and some major banks got affected for hours. So are we going to be zero traditional banking in the future, or still there will be some dependencies?
It's a very, very interesting question. I don't know, Radu, you want to start? How do you see the role of traditional or branch in future? And how do we take care of real risk of Microsoft Azure going down earlier part of this year, AWS having the downside, and what happens to the banking then?
Yeah, I will separate the question into two parts. I don't think the banks are going to play a role as a backup in case of a computer failure, because also the bank depends on computer. If the systems are not working, people cannot do anything in the branches. So I think sorting out for resilience, it's a different story, and I think the resilience will improve constantly, and backup and building additional data centers, whatever, Rails will sort this out. But from the customer experience, in my view, at least in the next foreseeable period, the branches will still be needed for specific types of customer and specific type of interactions. For example, if you want to have a discussion with your investment advisor, probably still many people would like to go to the branch. Or if you are having a question about your mortgage, again, some people would prefer. So I think the branches will be there by customer preference, not by technology.
Yeah. So branch is here to stay, and there are complex transactions around mortgages, around investments, around trade areas where corporate service branches or retail service branches are here to stay. Yeah? Excellent. With this, I'll close out. Time is up. Yeah? And I am between you and your coffee. So I'll close the panel with a big thanks and round of applause to the panelists.